This indicator is designed for scalping on 1-minute time frame. I will teach you how you can use this indicator to find the most accurate buy-sell signals ever. Just make sure you watch this video until the end and let's get started. But before we start, if you like my contents, please support the channel by liking the video and subscribing to my channel if you haven't subscribed yet. Alright, let's add the indicator. Here we click on indicators and we search 1-minute easy scalping. This one, which is written by Bull Trading AM. Alright, this is the indicator, and as you can see, it's overlaid on the price chart. I will explain what we have here, what settings should be changed, and how we can use it for finding buy-sell signals on 1-minute time frame. But before that, I'm proud to announce that recently I published a book, The Art of Price Action Trading, which is a complete guide to price action analysis. The link is in the description, and you can get it later if you want to master price action trading. Alright, getting back to the indicator, first we go to the settings of the indicator and we scroll down, and here we turn on trend average, and for the length we set it at 1, and for the offset we set it at 2, and for the multiplier 21 is okay. Alright, now let me explain what we have here. This yellow line, which is a dotted line, is the trend average line that we just turned it on. It will help us with identifying when there is a change happening in the longer term trend of the market. Then we have this line here that changes color between green and red, and this is a whole moving average. And then we have these two purple lines above and below the price, which are ATR, average true range, and we're going to use them for setting stop losses. This indicator is a multi-time frame indicator. You should use it on 1-minute time frame because it is designed for 1-minute time frame, and the indicator, besides using 1-minute time frame, it also uses another 3 time frames, which by default are set to 10 minutes, 15 minutes, and 30 minutes. We don't change these time frames because they are optimized for the strategy that I want to explain. Alright, now let me teach you how you can find accurate buy-sell signals based on this indicator. As I said earlier, we use this yellow dotted line for identifying changes in the trend. When the price is declining in a downtrend, the price is below the yellow line, and when the price is advancing in an uptrend, it is above the yellow line. So the crossing point of the price above or below the yellow line can be a signal for starting of a new trend, but not always, and you can also have many false signals if you only rely on this, especially when the price goes to a trading range. You can have lots of price crossovers above or below yellow line when the price is moving flat. So this crossing is just an initial signal that the trend is probably forming. First, I explain a long position setup, and then I will explain a short position setup. In a long position setup, we want a situation exactly like this, where the price from below the yellow line crosses the yellow line and goes above the yellow line. In the next step, the whole moving average line, this line, should also cross the yellow line and go above the yellow line. In this case, you can see that from here, when these candles are closed, the whole moving average line is above the yellow line. So here, until now, we have the price above the yellow line and the whole moving average also above the yellow line. We're going to use the whole moving average for identifying momentum changes, so we can find trading opportunities in the pullbacks. You can see that the whole moving average changes color between green and red. In a long position setup, we wait for the whole moving average to become red. When the whole moving average becomes red while it is still above the yellow line, it shows that probably we are having a pullback. Now in the next step, we wait for a signal that shows end of the pullback, and that is when the whole moving average again turns back to green. This shows that probably the pullback ended and the price is gonna advance more. So when this candle is closed and the whole moving average already turned to green, the buy signal is confirmed, and in practice we could enter a long position at this point when the new candle was opened. For the stop loss, we set it below this purple line, which is ATR, and if you remember, I said that we use this for setting a stop loss and profit target at risk to reward ratio of 2, and you can see that it was a very profitable position entering here. Please pay attention that while the price and whole moving average are still above the yellow line and the whole moving average turns to red and again green, you can enter a position. For example, we could enter another long position here with the stop loss below the ATR line and profit target at risk to reward ratio of 2. And after this trade, here again, you can see that it turned to red and again turned back to green at this point. So another long position we could enter here with the stop loss below the ATR line and profit target at risk to reward ratio of 2. And you can see that these two positions were also profitable, but you can also encounter these kinds of signals at the end of trends where a reversal is happening. Like here, you can see that the line turned to red and again turned back to green at this point. So we would enter a long position here, but this was a false signal. If you want to decrease your risk as much as possible, it is better to focus only on the first pullback after having the other conditions that I explained. Alright, this was a long position setup, and now let me teach you a short position setup. In a short position setup, we want a situation like this where the price from above the yellow line crosses the yellow line and goes below the yellow line. In the next step, the whole moving average line, this line, should also go below the yellow line. You can see that from here that these candles are closed. The whole moving average line is already below the yellow line. Now we should wait for a pullback, and we use the whole moving average line for identifying the pullback and end of the pullback. In a short position setup, we wait for the whole moving average line to become green, and this shows that probably a pullback is forming on the chart. Please pay attention that you need to be patient. This line, the whole moving average line, may turn to green very late, like this case here, or it may even never turn to green. We follow our trading strategy step by step so we can decrease our risk to a minimum amount, because the market doesn't move always like this, and after this crossing we could have lots of fluctuations here or having the price going to a trading range. So we follow the rules of our trading strategy step by step to decrease our risk as much as possible. Alright, here you can see that the whole moving average line turned to green, and then it turned back to red here when this candle is closed. So the sell signal here is confirmed, and in practice we could enter a short position at this point with the stop loss above the ATR line and profit target at risk to reward ratio of 2. And you can see that this position was also a very profitable trade. If you follow this trading strategy step by step, you can avoid many of the false signals. For example, here you can see that the price crossed the yellow line and went above the yellow line, and after that the whole moving average also went above the yellow line. So here for a long position setup, we wait for the whole moving average line to become red and then again green for entering a position. But you can see that by the time that it turned to green, the whole moving average line and the price, both of them are below the yellow line. So the long position setup is rejected here, and actually in this situation we should look for short position opportunity, because the price and the whole moving average line, both of them crossed the yellow line and went below the yellow line. Actually after this trade you can see that the price went to a trading range. In this situation you can see that the price is just moving above and below the yellow line, and this can put you in danger of encountering with false signals. But because we have different layers of confirmation in this trading strategy, usually in this situation of the market, before reaching to the final confirmation of entering a trade, the previous confirmations are violated, so help us to avoid false signals. But this is not always the case, and especially in this situation you can still encounter false signals. The most effective way to identify non-trending market is price action analysis, but you can also use some indicators like ADX, this one, average directional index, that can help you to know when the market is not trending. For example, during this time period, you can see that the ADX line is below 20. When ADX line is below 20, it tells us that the market is not trending and the price is moving flat. But please pay attention that with all the tools and method in place, you still encounter false signals. You can never avoid all of your false signals entirely. This is not possible in reality, and losing positions are always part of the game, and all we can do is minimizing our risk as much as possible and and managing our risk properly. There is a risk management strategy that is called 1% rule, and it is one of the best risk management strategies that you can use. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy, you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.